Hey visionaries, today's episode is brought to you by Polkadot, a leading layer 0 blockchain with over 2,000 developers. It's a network protocol that allows arbitrary data, not just tokens, to be transferred across blockchains. Listen to what Polkadot creator Gavin Wood tells Raoul about Polkadot's coming Jam Chain, short for Join Accumulate Machine.
So what we're doing is we're turning what used to be the Polkadot relay chain built for a very specific purpose, right, to secure and relay messages between separate blockchain ecosystems. And we're turning that into something much more akin to this like world computer, this like kind of ubiquitous multi-core singleton virtual machine.
Learn more and join the community now by going to realvision.com/Polkadot. Ride the rally or fade. Hi, everyone. Welcome to the Real Vision Daily Briefing. I'm Maggie Lake. With me today is Jared Dillian, editor of the Daily Dirtnap newsletter and a member of the RV Marketplace. So if you'd like to subscribe to Jared's work, you can find an easy link in the Marketplace tab on our website, and RV members get a special offer. So check it out. Hey, Jared. It's great to see you.
Yeah, good to be back. It's been a while.
It has, and keen observers, and we know our members will notice that you're sitting in a different location.
Yep, new house,
You're in the
new
new
office in
house.
the new house. Yep.
Awesome. How's it feel?
Feels great. This is an amazing space. I gave you the tour. I'm not gonna turn my camera around for the daily briefing, but it's an amazing office. Yeah.
Yeah, that's great. Jared built a podcast studio in his office, which is pretty awesome. So we're looking forward to tuning into everything you have on tap and the books and all that good stuff that a lot of creative juices flowing in that space, people. But let's focus some of them on the markets, because it was quite a day for U.S. stocks. NASDAQ and S&P 500 both hitting record highs. Treasury yields backing down. What did you make of the market action?
Well, it's quite a day for bonds. I actually thought that was most interesting. The CPI came in mostly in line, slightly better. And whenever you have like an inline number on some piece of economic data and the bond market rips one way or another, it kind of tells you how people were positioned going into it. And, we've had commodities rallying over the last couple of months. Copper has gone parabolic. Everybody's been talking about all this inflation. Everybody was short going into the number bonds and, had to cover. Retail sales, I think, really was what pushed it over the edge. It was a terrible retail sales number. And if you believe that this is sort of the beginning of the end for the consumer, if this is like the first data point, where we're seeing a real slowdown in consumer spending, then that's exactly what the Fed would like to see. And I don't know. I'm not entirely sure we're going to get 25 basis points in September, but nonetheless, it changed the landscape a bit.
Yeah, it certainly did. And you're right. Rate action has been driving everything. But it's been a source of frustration, right? Because we've been here before where rates sort of decide rate cut, the bond market decides that we're going to get rate cuts or that the worst is over with inflation. And then we've kind of bounced back again. We've been on both sides of the argument. Does this feel like it's different this time, that, rates are going to move lower and that we are going to open up that lane? Or could we be in another situation where a bad print gets us right back up with higher yields?
Oh, I mean, we have a couple of data points now. I mean, there are three data points really. We have, a slightly better CPI today, retail sales, and we also had the claims number from last week coming in at 234. One claims number doesn't really mean anything. You want to look at the 4-week moving average, but we have claims tomorrow. If we get another claims number in the 230s range, then it just connect the dots. It kind of seems like we're pointing towards a slowdown.
Yeah, and it really started when we got a bad print on the monthly jobs number. UMich was terrible. We've had a sort of steady drumbeat of things coming in lower. We understand that the expectation is that, okay, the Fed's gonna come in, but does this feel like the economy rolling over? Do we finally have to start talking about the risk of a recession, or is it just the cool down that the Fed needed? It doesn't matter.
I don't know. I think it's a little bit premature to be talking about the risk of a recession. I mean, my portfolio is set up where if we get a recession, I'm killing it. I would love a recession. Like that's kind of how I'm positioned. But I think it's a little premature to be talking about that. I do want to talk about one thing which I mentioned in one of my newsletters earlier this week. Um, I've been trading for a long time. And back when I was at Lehman Brothers in the early days in like 2002, this is before algos, right? So when a piece of economic data would come out, if you were fast, you could actually trade off of it. Now it just happens in microseconds and it's impossible. But for the data that would come out at 10 o'clock, like the ISM numbers and stuff like that, like you could actually, with a program trading terminal, you could launch a basket of stocks with your mouse, like right after a number came out, and make money off of it. Like I said, this is before the algos. Well, back then, good news was good news and bad news was bad news. If ISM came in hot, you would buy stocks. If ISM came in weak, you would sell stocks. And this all changed around 2007, 2008. And now everything is backwards, where good news is bad news and bad news is good news. We had a terrible retail sales number today, and the S&P is up almost 2%.
Yeah.
I mean, it just, I'm just telling people it didn't always used to be this way. It didn't used to be this way. This used to be bad news for the market.
Yeah, which is why I asked because initially, the fact that rates aren't going up, borrowing costs aren't going up, I could see that being positive. But if the reason behind that is because we're headed to something that's a slowdown or recession, that's got to have an impact on corporate profits. So, you know, it's it can be a little puzzling. I mean, I guess the liquidity story is dominating, and people are not worrying about the
The
profit side of
liquidity
things for
story is
now.
dominating.
Yeah.
Yeah, the liquidity story is dominating.
And by that we mean the Fed is going to come in and try to support the economy in some way, and that money in the system will find its way to what has been the case, finding its way to risk assets. Curious about let's back up on the sentiment reading for a second, or sentiment issue in the market. So somebody in the David in the chat said, "What a day for Bitcoin, oil, gold, silver." I mean, everything was up. Earlier this week, we saw meme stocks sort of reemerge, and we had that change. They were down today. They were moving. Bitcoin was not. They were down today. Other assets are moving on this. What is your sense of the return of that? If it was a couple of day event, should we just consider it noise, or is is it a worrying sign that the sort of excesses and speculation are back in the market?
It's definitely a worrying sign. I mean, this didn't happen in October of 2022. Like Keith Gill did not pick October 15th of 2022 to put that meme on Twitter. The markets were already at the all-time highs. So from a sentiment standpoint, and this is what I do, it is a sentiment data point. Like this is, if you're a bull, this is not the type of thing you'd like to see. Having said that, um, technically, we had a very strong impulsive move today. It's the type of move where you usually get follow through. I
Mhm.
don't think this is the top. I think I mean, at a minimum, we probably have another 2 to 4% before you even think about calling it the top. So I think we're going to get follow through off of this.
Yeah, that's it's really important to think about that. And Tony was on yesterday, also kind of, once again indicating he felt like it was going to be this kind of day today. He was seeing the things line up, and so both of you are on the same page with that. That when you get this strong move, that you do sort of have to respect the market and respect the momentum. Jared, what about the sort of nature of the rally? Are we seeing the kind of breadth and volume that gives you confidence, or are there some things underneath the hood that we need to pay attention to?
Well, we're seeing volume. I mean, basically, what we're seeing is sort of an inversion of what we saw for the last couple of months, which is tech sort of tech and tech is sort of lagging and commodities rallying. I'm looking at my screen today. Most commodities are down. Um, I'm looking at FCX. FCX is about unch. But the big tech names are up. Like I said, it's an inversion of what we've seen for the last couple of months. And, this is not the type of environment that I like to trade. I wouldn't be surprised if next week or the week after we're talking about the Magnificent Seven again and that whole thing
Mhm.
happens. And, it's back to where we were a couple of months ago.
And why don't you like that environment? Why don't you like trading that environment?
It's just hard for me. I've never I have a theory about this. Like I think a lot of people uh, become the traders that they are because of the environment that they were raised in. You know what I mean? The time that they started trading dictates what kind of trader they are.
Mm,
So I started trading literally at the top of the dot com bubble. In the first 3 years of my career were a bear market, right? So it's really like I wasn't burned by it, but that made a big an impression on me that stocks can and do go down 50%, especially tech stocks. So like I said, the first 3 years of my career were the biggest tech bear market of all time.
mm.
And I trade like that ever since.
Yeah, well, it's great for you to have that awareness, because I think some people have that bias and they don't realize it. Um, do you do you miss opportunity? There's so much happening in tech, and we can debate the AI trend, whether it's hype or not, or whether you need to be smart about it, not just jump on the next moving, mention of AI. But do you feel like you miss out on that? Because we're at that cusp again, aren't we? Where we're at the potential to have this transformational change that does impact so many companies. So how do you make sure you don't miss things but respect what you saw, I guess is what I'm asking.
Well, for one thing, like writing a newsletter, um, people people aren't paying me to recommend Apple. You know what I mean? Like it's the most
Mm.
consensus stock of all time. Everybody owns it. Like it takes no brain power to be long Apple. Like people aren't paying me to recommend Apple. They're paying me to look for opportunities in places where they wouldn't ordinarily look, you know? So I've never really participated in the big tech stocks, Apple, Google, whatever. I never have. But I've made a pretty decent living, screwing around with other stuff,
Yeah.
and
That's
there's,
it's a great point. That's the known, right? So what you wanna kinda concentrate on is the stuff outside of the known.
yep.
Yeah, that's especially because so many of us do hold this sort of, big cap. So if we are looking at that, if we put those off to the side for a moment, where do you see opportunity against this backdrop? Well, let's just wrap up the macro backdrop. So we're seeing some worrying signs. We're seeing data rollover. Sounds like you think maybe the peak is in, certainly, and we're in a better rate environment, a lower rate environment now. We're not going to maybe test that because remember, Jamie Dimon came out and said, "Hey, they could be 2%, they could be 8%." So it sounds like, do you think we're away from the risk of that, you know, 5.5, 6, 7, 8 environment, and we're in a more sort of benevolent rate environment? Is that
At
what you would?
least at least for the next 6 months. I
Mhm.
mean, the election is going to change everything. If Trump gets elected, you're looking at probably lower short term rates and higher long term rates. You're looking at a big steepening in the yield curve. If Biden gets elected, you're looking at more of the same, although the Fed might feel they have room to actually hike rates after the election if the economy is still strong. So, I mean, really, like our window, we can only see out 6 months, and what happens after that is going to change everything. I mean, if you remember the 2016 election when Trump was elected, Hillary was pretty much priced in, and Trump pulled it out at the end, and that changed the entire financial environment.
Yeah.
Stocks rallied 30 or 40%. Like, I mean, it was, so something similar could happen in November.
And there are even more unknowns now. I think,
Yeah.
if he does win, especially we've been talking on the geopolitical side of things about trade and, just, how much of the rhetoric actually turns into, actual recommendations or policy. So you're right. There's so much unknown, maybe more than we're even used to. So in that shorter period, then in the period we can see as we enter to the summer, where do you see opportunity outside of the big mega cap tech names?
Well, I mean, up until today, I was looking at copper, I was looking at commodities. I do think we made the turn in commodities. Tony and I probably agree on that. Um, so that that's I actually made sort of a shopping list on my screen of a bunch of different stuff. And what was interesting was when I walked in this morning, commodities were all green, and by the end of the day, they were all red.
Mhm.
So this is part of a lot of people don't realize this, but this is part of a push pull between real assets, hard assets, and financial assets, right? And financial assets and hard assets are often negatively correlated. I call it paper versus things. So
Mhm.
today was a big day for paper, right? So financials and tech and stuff like that. And it was a bad day for things. So we kind of operated in these regimes where sometimes paper outperforms, sometimes things outperform. But I think paper assets are going to probably outperform for the next couple of weeks. So
Uh, Ched, wondering about your thoughts on gold and silver up until the election.
yeah, big day for gold and silver today. Silver especially. Silver had a big move today. The charts continue to look amazing. Um, I mean, this is along with short private equity, probably my highest conviction trade. My position in silver is pretty small. I'm not really positioned for a big move in silver, but my gold position is very large. The high was 24.30. We got up to about 23.90 today. We've been correcting for about a month in gold, and now it looks like we might have another run at a breakout again.
What are you concerned about in the private equity space? Because you mentioned short private equity.
Yeah, this is I mean, this is a could be a long conversation. This is my
You can give us a
number
highlight because
1.
you've been writing some great stuff on that in your notes.
Yeah, this is my number 1 short idea. I mean, basically, there's a bunch of things, right? So, I don't think we should live in a world where all companies are privately held. I think there are significant benefits to going public, right? And I also don't think that private equity managers are particularly skilled in managing their portfolio companies across a range of industries. I don't think this is, I think there is a bubble in private equity. I think it's a massive bubble, and private equity made sense when rates were zero and you could buy portfolio companies at 4 or 5 times. But when rates are 5% and you're buying stuff at 10 to 12 times, it just does not make any sense. I actually tweeted the other day, Buffett is sitting on $189 billion in cash and he can't find anything he wants to buy. And the private equity guys think everything looks good, right? Just wave it in. So we are very close to the top of that cycle. And I think it could be, it's kind of premature to say this, but I think it could be a big short. I think the unwind of private equity could be something like what we had with the financial crisis in 2007.
Are there systemic problems that will come from that?
We're not really going to know where those problems are until it happens, but for sure there will be. Yeah. I mean, basically, there's no liquidity. People are going to want their money out. They're not going to be able to get their money out. If public markets start selling off, if the public markets sell off 20% and private markets have to mark down their holdings, people are going to want to redeem.
Mm.
So
Is I mean, there is sometimes a sense that private market, in the same way that they benefit when they have access to stuff that the public market doesn't, that private market, private equity is sort of made up of the wealthy, family offices, those with means, those with assets. So if it gets ugly for them, though, does it jump over to impact? I mean, one would
Well,
think
really,
there's
really,
some
it gets
liquidity.
ugly. It gets ugly for pension funds and endowments. Those
Right.
are the ones that are really stuffed with alternatives. Um, I saw recently that I think it was the Stanford Endowment had I think I might get this wrong, but 38% of their money in private equity, and across endowments it averages about 20 to 30%.
Mm.
Pension funds the same thing. And they just keep piling money in.
Yeah, and well, and that was created, that was a byproduct of zero interest rates, right? They can't fund their obligations with zero interest rates, and so they were forced out further into the risk curve.
Yep,
But I guess that hasn't
exactly.
corrected because your money's locked up also a lot of the time when you're,
Yep.
in those. So when yields went to 5%, they couldn't really necessarily roll that back, I suppose. They might have been trying to, but I think this is really important. And, people were talking about it a lot, Jared. I felt like when we were thinking what's going to break with the increase in interest rates, but then that died off. Like we've stopped asking that question, what's going to break? I wonder if that's a mistake. We've sort of forgotten about it.
Well, like I said, we might get higher interest rates after the election, particularly if Biden wins. So could be interesting. I mean, stuff did break when interest rates went up. Silicon Valley Bank broke.
Yeah.
That was one
And they ring
example.
fenced it, but that
Yeah.
threat of something larger, but if you're talking about, the amount of money that's in PE, that would be worrying. Um, um, we had a question here. G Blackburn was asking, how do you short private equity? I suppose you pick some names of people, or is it an individual name? Is it an ETF? Is it how do you think about that?
I do. I am concentrated in one name, but you got to subscribe to get it.
Right.
So yeah,
Fair enough. But you are looking at individual names.
individual names. Yeah.
Yeah, yeah, interesting. Um, what about Argentina? I know you were early on that. I think you believe you did very well on that. Are you out of that trade now? Are you still interested in that trade?
I'm still in. I mean, that is probably I'm going to stay in that until the next election. Um, So yeah, I mean, one of the stocks that I bought is up close to 200% in the span of 6 months. This is what I said. Like, I don't need to be long Google to get exposure to things that go up. There's lots of other stuff out there if you pay attention. So
Yeah, which, everyone, there's such concentration that, I think that this comes up sometimes when we're talking to people who feel the same way and looking for those opportunities. But it's just been so hard because everything's crowded into. So even if you see value in companies, it doesn't seem to necessarily get appreciated. Is it harder to be a sort of stock picker or find that value, or you still get the returns? It just doesn't get the publicity.
it's hard. It's
Yeah.
hard. Um, I to be honest, I depend on other people for ideas. You know what I mean? I'm
Mm,
really not the best at coming up with idea generation, but the one thing about being in my position is I talk to thousands of people, right?
right.
Lots of people email me, and people, I get tons of ideas every day. Some of them are good, some of them are not so good, but every once in a while I say, wow, this looks really good. We should do that. So
Yeah. And then it's you all of your years of experience being able to understand what the market's telling you and the trends and the timing of it. And that's the hardest part. We get asked that all the time. Uh you we were talking about trading and stuff. Are you back active? Because for a while you were strictly paper because of
oh
the
no, I'm back. I've
you're
been back
back.
for a while. Yeah. Yeah.
Yeah, I thought you were. I just wanted to clarify that because people remember when you were building the house that you were talking about your paper trades. Is there eh, how do you so you're sitting on some of your ideas have really played out. You were early, as I mentioned, on Argentina, and you've been doing well with the commodities. How do you know when to take profits, Jared? When do you because we've talked before about the fact that you will fight and hang on for a trade if you think it's right for a while. How do you How do you think about that? And are you, because there's so much uncertainty in the future, are you taking profits? Do you have long positions still? Are you trying to wrap things up before we head into this crazy election? How are you going to think about that?
Um, yeah, figuring out when to sell something is a lot harder than figuring out when to buy something, right?
Yeah.
Like if you want to buy a stock, you just push the button, buy the stock. There's really not a lot of brain damage that goes into it. But if you're up 200% on something, like that, you really have to think. I mean, if you've made a significant amount of money, sometimes you're just like, you know what, I've made enough money. I don't need to try to top tick this thing. I'm getting out. In the case of Argentina, I think I mean, I think a bunch of things. I think Malay is going to fulfill his promise of turning Argentina around. I think the Argentina stock market has significant upside, and I'm sticking with it at least until the next election cycle.
Fair enough. But as you say, it's the hardest thing to do. By the way, there's a news flash coming across. We were just talking about Warren Buffett not being able to find things he wants to buy. Supposedly, Berkshire revealed that Chubb was a stock that they have been nibbling at. Again, not surprisingly, not a high flying, AI stock, but an insurer.
Yeah.
Which is like, he likes operating in territories he understands well. So that's perhaps not surprising. What's going to be? You mentioned claims out tomorrow. What else is going to be really important for you, Jared, as you try to watch this environment and figure out what's going on with the economy and whether this is the beginning of something that is more worrying in terms of a downturn? Because it's been so resilient. That's been the surprise, is the upside. So what are you going to be watching closely? Is it the employment front? Is it inflation? What matters most here?
I mean, there's going to be nothing in the next couple of weeks. We got, I mean, I hate to say it, but we got quite a bit of upside here in the next couple of weeks. I don't really see any data on the calendar that is going to derail this rally. I'm looking at it right now, and yeah, I mean, we're getting the meeting minutes, I guess next week, but
Yeah, nothing major.
yeah.
But, do you think that you're gonna see the most of the action in the riskier parts of the market, or do you feel like this could broaden out and be a good mix of, I love you're talking about paper versus things. Is it gonna be all paper, or do you see this broadening out maybe?
Well, it's probably going to be all paper. Yeah, like I said, we're probably going to be back to the Magnificent Seven. It's it, it ah, sentiment is elevated, right? If I were to rank sentiment on a scale of 1 to 10, I would say it's probably about a 7. Okay, it's not at a 10.
Mm.
Like, I'm not seeing the type of stuff on Twitter that you usually see at the top of a cycle. So I still think we have some more upside.
All right. Well, that'll make a lot of people happy, that's for sure.
Not me.
I know, I know. But some of the folks in here, I'm guessing, are going to applaud that. Jared, congrats on the new house. You have a new house. You have a new cat. There's a lot going on down there.
Yeah, and a new book coming out in November.
That's right. I saw you post about that. Super exciting. So
Yep,
it's already
yep,
it's already to the publisher. It just has to be printed up and edited and all that good stuff.
yep.
Amazing. Well, we're super excited about that, and we hope we can have a book party when it comes out.
Ooh, that sounds good.
Doesn't it? I know, I love it. I can't believe no one in the chat has invited themselves over your house today. Usually they're like, "Jared, when are we having the housewarming?" They'll get there. They're too busy counting the money they made off tech stocks today. Great stuff, Jared. Thanks so much. Great to catch up with you. Enjoy the new digs, and thanks everybody. We will be back tomorrow, same time. Hope to see you then. In the meantime, take care and good luck out there. Hey visionaries, today's episode is brought to you by Polkadot, a leading layer 0 blockchain with over 2,000 developers. It's a network protocol that allows arbitrary data, not just tokens, to be transferred across blockchains. Listen to what Polkadot creator Gavin Wood tells Raoul about Polkadot's coming Jam Chain, short for Join Accumulate Machine.
So what we're doing is we're turning what used to be the Polkadot relay chain built for a very specific purpose, right, to secure and relay messages between separate blockchain ecosystems. And we're turning that into something much more akin to this like world computer, this like kind of ubiquitous multi-core singleton virtual machine.
Learn more and join the community now by going to realvision.com/Polkadot.